Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So we got the US CPI report coming out, the inflation metric, right? So what happened there? We got the number that came out higher than expected, the core number and the headline when you take in consideration the gasoline prices and when you take them out, both those numbers, those calculations came out higher. Now, there's two ways to look at this, right? Half the markets may, or half the people out there may look at this as a really bad thing. The other half may look at it as that, okay, it's inflation is still sticking around, and we've seen that since last month's data and previously before. We haven't made a trend towards inflation improving significantly, but it's still not that bad because we've seen it before in the previous months, right? Especially when you look at the unrounded number, right? Although the numbers that you will see and that's posted is around 0.4%, but when you look at the unrounded number, it comes out to be 0.359, which is very similar to previous months, right? So you can kind of say that it's more towards the 0.3% number. So what does this all mean, right? When we look at the inflation report, when we look at what's coming out, we're seeing that inflation is just sticking around. It's ranging here. It's not going drastically up. It's not going drastically lower. We are seeing an uptick. Sometimes we see a little bit of a downtick in certain areas, but not significantly. We've also seen that the BLS, when they came out, they discussed that shelter component, the food component, was a big contributor to higher inflation, right? More than 60% of the contribution to inflation was coming from shelter, right? And part of the shelter prices being higher, part of that calculation has to do with also, yes, higher interest rates. So the fact that interest rates were going up was also contributing to the higher shelter component, higher CPI report. In terms of the other reports, yes, gasoline prices, oil prices, we've been seeing it tick up, right? But in other areas, you are seeing a disinflation scenario. But the fact that shelter component continues to be up there, food component as well, creating that stickiness in the inflation basically tells you that the June rate cut that everyone was expecting, especially traders, is not so true. That may not come very soon. It's very funny because since last year, since the beginning of also this year and the end of last year, we've heard too many people come out, make bold predictions. You hear realtors come out, talk about that, guys, rate cuts are coming imminent, right? And look at it. We're already in April. We're talking about that June is likely not to happen, right? And let's not forget that traders and markets were predicting that a rate cut was going to come in March. Everyone was happy about that, right? Didn't happen. They said, okay, probably May, and that didn't happen. The Fed threw cold water on that idea. And now they're like, okay, more than 50% chance we're going to get a June rate cut. And now look at it. CPI still sticking around, not making big strides to moving down lower. And we see in oil prices moving up slightly higher compared to previous months. And you see that now the June rate cut probability is being pushed out. There's a less chance of it happening, right? So less than 50% chance now. We still have more data to look at. Yes, that is true. We still have another CPI inflation report before the June's number. So yes, that is all true. But will it change things? Maybe, maybe not. But if it's still going to look the same and it's still going to be sticky as it is, then traders are probably going to price out the June rate cut. And what they're pricing in now is that, okay, we're pushing rate cuts that we thought was from coming in March, that we thought was coming in May, that we thought was coming in June, we're going to push it to now September. And lo and behold, that happens to also be elections time. So we'll see what happens then. Let's also not forget the Fed members that have been coming out discussing that they don't see aggressive rate cuts. We also heard Bostic come out as well, reiterate the same thing, saying that he sees one rate cut, and sure, open to the idea of more rate cuts is possible, but still sees one rate cut down the road, right? Could we see that scenario? Traders are now pricing in 2 rate cuts, down from 3. We haven't heard from the Fed confirming that they're dialing down the rate cuts. We will see, and data is going to be really, really important in order to determine that. Now, another thing I want to bring up is when you look at the headline CPI inflation number and the core CPI inflation, right? We see those stickiness. But have we forgot, this is really funny, have we forgot about the core CPI, the super core CPI number, right? Remember the Fed introduced the super core CPI, right? It's a core inflation where you're now stripping out shelter. You're stripping out basically everything from the number, and you're leaving some services components in that super core number. That number went up also in this report. And if you've been looking at the trend, it's been upward sloping. And we've been seeing that super core number, the year-over-year number, has been upward trending. So are we going to completely now ignore that, right? I'm very curious what the Fed has to say about the super core number. It's showing signs of elevated inflation and it's ticking up, right? The Fed introduced this number to try to make things look good and say that, we're going to focus on this number because it's more important than the other numbers. And, you could say that you're manipulating the data to try to make things look good. Well, if your new manipulated data that you set out there is now not performing the way you wanted it to, then what do we do then? Do we go back to hiking rates? So the idea of hiking rates is out of the question for sure. Unless something drastic happens in the next coming months that just skyrockets oil, skyrockets inflation, and so on. We did hear also continuation from Fed members saying that we need to be at it in continuing to fight this inflation. We're not done yet. And we need to continue to assess the data, the numbers that are coming out. And until then, we'll figure out, how many rate cuts are needed. So rate cut is coming, whether it's 3, whether it's 2, whether it's 1. It's probably going to come sometime this year. But it's looking like now September, and who knows, if data doesn't get better by then it could be December, right? And then what could be the new surprise? The new surprise is, no rate cuts, right? So you gotta stop listening to the hype that people have there that's saying that rate cuts are going to come and then there's going to be 150 basis points of rate cuts and we're going to get to 2% very quickly. Not a chance, right? Until the data looks really, really bad. And it doesn't from a growth point of view, right? If we see the growth data, GDP, the jobs number in the US still continue to be strong and resilient, then what's the point? And we heard Fed Kashkari say that. What's the point? Although I know he's a hawk, he's more on the hawkish side of things, but he's like, what's the point? And, he's not the only one to reiterate that. We've seen other Fed members say the same thing. What's the point of cutting rates? If the economy's fine, then fantastic. We don't need to cut, right? And what does this also mean in terms of the stock market, the bond market? Now, the bond market did sell off aggressively, as you see behind here, this chart right here, right? We did see a massive sell-off on the short end, the 2-year bond. So we did see that happen. We did see the equity markets also sell off. But in terms of the equity markets, it has a mind of their own. And if they were rallying and they were, going up even with the tightness in the markets and the tightening that they're doing, it can still continue to go up. There could be hiccups here and there, but if the economy is still strong, resilient, and inflation is not upticking aggressively, and there's rate cuts coming, markets could still move up higher until there's some sort of panic or black swan event, which, if it is to come, we will find out later on. So anyways, this was basically how the CPI report played out, my opinions on it. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers, bye.